So yeah, let's talk about Bitcoin halving cycles now. Yeah, we're gonna go through what exactly is a Bitcoin halving cycle, and then we're gonna go some charts on TradingView, and it's gonna be a fun lab. So
Sweet.
yeah, let's get started. So Chance, are you familiar with what like a halving is for Bitcoin? I'm trying to get the familiarity for like audience, because I know most of you guys are from a forex or equity background. So are you guys
I'm not.
familiar?
I know
Okay,
you've spoken about this before.
yeah.
So I think you're going to jog my memory a little bit. If you would ask me right now, it's a Bitcoin halving cycle, I wouldn't be able to.
Oh, that's perfect. I'll break it down. I'll break it down to you and explain it like you're not like you're five, but like you're well
Okay,
educated.
bro. Come on. Be like I'm fine. Come on. Now this is an asset. Come on, hit me with. What were you guys in chat? Have you guys ever heard of coin halving cycles? Is it you're aware of? Is this something you've seen before? Because it's not something I've seen before.
All right, so let's start with the fundamental. So Bitcoin operates on a supply mechanism. So essentially, uh, Bitcoin itself, it's capped at 21 million coins. So like the U.S. dollar, the Federal Reserve, you can't just keep making Bitcoin forever. And so in theory, it is a deflationary asset. So and so just some fundamentals to understand. New Bitcoins are created through a process called where essentially miners complex mathematical or cryptographic problems to validate transactions and add them to the blockchain. And then we have what's called a halving event. So approximately every 4 years or after 210,000 blocks, a significant halving occurs. And essentially what this does is reduces the rate at which new coins are created by half. So essentially it's like a deflationary process. Let's move forward.
Well, I'll finish. I got a question, but I'll let you first because I got a feeling you're going to answer the question in a minute.
Okay. Yeah. So the dynamics behind the halving event is that it's designed to introduce key into the Bitcoin supply, like mirroring precious metals like gold, which I know is I think you said it's useless. So I don't know how good an example this is. But all kidding aside, as the rate of new Bitcoin slows, it essentially contributes to the percent of Bitcoin as a store of value, like similar to gold and other metals like silver and palladium and platinum, etc.
That answered my question.
Okay.
So it was a good job I held off.
Yeah. So one important aspect of when halving occurs is that it has an impact on mining. Before a halving, Bitcoin miners, they basically give a certain number of bitcoins as a reward for each block they simply mine. And so after a halving, this reward is making it more, basically makes it more challenging for miners to earn the same number of bitcoins for their efforts.
Okay, so it screws their business.
Yeah. So I guess there's more and more competition to get extra, so supply keeps doing. There's more competition to get that computing or get whatever like energy you need to mine that Bitcoin. And if the price going up as it has been, then it does make sense to use all those resources to continuing those Bitcoins, even though the reward is halved, but the price just keep up. Yeah, and we'll look later, and I'll tell you what I mean. And then next slide. So the implications on this is that halving events is that proponents like Bitcoin proponents basically argue that the halving events contribute Bitcoin's deflationary nature and highest digital scarcity, potentially influencing its role as a hedge inflation. So this is kind of like a big topic of debate among the I mean, I guess it's not a big topic among the Bitcoin community because everybody says, yeah, it's a hedge against inflation. Me as a trader, I would sometimes say, I don't know, is it a hedge against inflation? Because when things like COVID and the Ukraine Russia happens, we see Bitcoin and like risk on assets, even gold like fell off a cliff during COVID. So I don't know. I know most Bitcoin influencers like people who are like crypto hedge funds. That's their narrative. It's a hedge inflation. I'm a trader, so I'll just go with what way the price of Bitcoin goes.
Yeah, that was always one of my biggest ones of like where, and we've been through this over and I've talked about it on chat too. Where does it fit in the finance world? What point is it a good to get in, and what point is a bad time to get in, and that type of. And I can understand that people are expecting it to be an inflationary hedge, and holding to that narrative, awesome. But if it's designed something to be that, it's still excuse me, you still require everyone paying it in order for that to happen. You still require, you can say, yes, this is a hedge against inflation, but if no one else going to hedge against inflation in Bitcoin, well, then it's a hedge against inflation, right? You need everyone else. So maybe that's what they're trying to sell. I mean, I've just quick added against the gold chart and it's not overly different. So you can see the essence in there, but yeah.
Yeah. Oh yeah, but I wanted to ask a question because I know you were saying last week you kind of wanted to get in on Bitcoin, you're just not sure if it's the right time. And I know like when it comes to, so I would assume this would be an investment for you for your portfolio. And I know when it comes to investing, you're more of a funds guy. So see like a fundamental use case for Bitcoin. Why do you want to get in on Bitcoin?
That's my right? Okay. My problem is I like the idea of adding the asset class to my portfolio. I like the idea of getting exposure to it, right? Because I think I don't phase or what it's evidence of real assets being used, and I want exposure to them. My issue is finding where. And that's my issue is I'm a fundamental trader, especially as in I like a driving force that's going to do it. I like the idea of buying it because it's up, right? Like that doesn't correlate with the way that I am. So that's the thing I'm struggling with. The thing I'm struggling with, okay, why? Why is this go up? And now the only answer I can get is because people are going to buy it. It's just like, well, that's like that's not good for me. Like if I were to pitch that up to an investor, they're going to look like, are you crazy? And that's kind of how my mind works. I want exposure to that class. I just don't know where it fits, and really maybe something like an ETF to my portfolio in a small amount of exposure. But I'd like to see, like Bitcoin, if it became inflationary hedge, I'd like that. And I would like to add to my inflationary hedge position. I'm looking for US dollar weakness, right? I'd like to see that there's a good spot to get in to go against that US dollar weakness and things like that's what I'm for. So as of right now, I can't see that yet. And that's what I'm challenging. I'm trying to, okay, when is that? Where is it? And is that there?
Yeah. Now, Des Patrick in the chat is saying some interesting thing. If crypto stays, each country would bring their own key and make Bitcoin redundant potentially, which is true because basically each country have the Fed coin, so the Fed already developing their own central bank currency, as well as China, and I'm sure the EU is as well. However, the thing is with Bitcoin, it is the supply is capped. So I don't know about these CBDCs that the Fed and the Bank of Japan, the Bank of China, or the Euro Central Bank is developing. I don't think they're as fundamentally as the use case for Bitcoin. It depends on your opinion. He says, good for criminals to exchange funds. Look, the U.S. dollar is used for more criminal activity than any other currency, Bitcoin. So, plus with Bitcoin, you can actually track on the blockchain. You can transactions. So, if anything, it's actually not that good for criminals. There's other cryptos that are better for that. Which I'll get into.
The good criminals is the anti-crypto campaign, right? It's kind of that plan of fear so you don't go towards the thing because it's a currency, right? Criminals are going to go business no matter where they are, no matter what they use. Like it goes back to cash, right? Pure cash. Untouchable, just go give people cash. Like that's not, I wouldn't say untraceable, but it goes back all local drug deals. It's every nation ever. It's all done cash, and you can't. Doesn't change. It doesn't increase the activity. It doesn't decrease the activity. It just I the only issue is the large sum go overseas and the different tractions but happening anyway. It happens with tax of it happens in objects. You buy a boat, you send them a boat, they sell a boat. All of a sudden, you've done a great transaction, right? like this is already happening at the moment. So I wouldn't too much merit in that, but I get the point of view.
Yeah. And Vanessa saying 92% of Indians in the recent poll rejected the very notion of a CC. And I guess I agree with the Canadians.
Yeah. I mean, it defeats the purpose of cryptocurrency, right? A centralized crypto coin is like, we might as well just have a digital Canadian dollar.
Yeah. So,
right?
yeah. This is actually I discussed with my William, who I had a talk with the show maybe like a month ago. And we discussed, is crypto a threat to governments? And that was an interesting conversation. Make sure you guys watch that episode. Got back in the archive a bit, but that was a really good conversation.
Yeah. The fact that transactions can be traded negative for currency, I heard this was a selling point for crypto at the start, but it turned out false. Like you get transaction IDs. I don't think that's a negative.
I mean, it depends. Is it like if you're a criminal, like you don't want your transactions traced? So, yeah, I mean, it's a topic for debate.
Yeah.
Like, and there's like other crypto that are very much focused on privacy aspect. There are certain like projects that their main focus is basically having transactions not being traced. Shout out Arrow, which I think is one of the privacy coins cycle. Yeah, so the Bitcoin cycle is expected to continue until the maximum supply of 20. That says he has obviously. No comment, Des. Okay, so the maximum supply of Bitcoin is supposed to be 21 million in the year 2040. So I don't know if I'll be alive by 140. I might be alive. I mean, maybe you can bet about that. Maybe
I take the unders on that then, because I don't reckon be alive by 2140.
Yeah. And eco adds a new layer of complexity, evolving dynamics of Bitcoin. And let's go on slide. So the important thing of this is what is actually the market response to the halvings. So obviously we have the next halving coming up, I believe in next May of 2024. So historically, Bitcoin events, and we'll go through this in a trade chart that I've plotted out in a bit. Bitcoin halving have been associated with increases in speculation in the markets, and some investors anticipate that the reduction in supply will contribute upwards pressure. So let's just go over some of the history of the previous halving. So the first halving on November 28th, 2012, and the block reward went from 50 Bitcoin to 5 Bitcoin, and basically price impact was leading up to the Bitcoin's price saw a increase, and after that, Bitcoin entered a very bull market, reaching new highs, and basically pretty much for every halving of pretty much the same period. Exception is May 11th, 20, because obviously in March of 2020 we had COVID, so that was kind of like a black swan event, which kind of I don't know, like ruined the burn. But afterwards, Bitcoin obviously end up go to new all-time highs, and
I wonder if there's a correlation between the patterns in Bitcoin halving and stocks. Because like you remember when Tesla split their shares, and that soared. That they split that and then up into the split, and then after the split, soared. So I wonder if there's a bit of a correlation in analyzing Bitcoin halving and stock splits in the equities market.
That would be a good analysis to do.